All right, everyone, the bears are growling louder and louder. People are throwing around the R word like there is no tomorrow. Recession, obviously, nobody likes hearing that. It is a sea of red out there, as you can see from our gorgeous little heat map over there. So we're going to give you a quick midweek rundown on what's going on. We're going to touch on crypto, commodities, a little bit of equities, and we're going to do it fairly quickly because the way everything's going, things will likely have changed by the end of this 5-minute video. So let's dive straight in with inflation and rate hikes, of course. Inflation and rate hikes do tend to impact like the whole entire market, and I'm sure you've heard by now, but the Fed hiked rates by 0.75% on Wednesday, which is the harshest rate hike in 28 years, so since 1994, which is actually before I was even born, which is pretty crazy. It's much harsher than anybody was hoping for, but also pretty much on par with what people were actually expecting after last week's red-hot CPI data. If you remember, inflation came in at 8.6% in May, which is the highest acceleration in like 40 years or something. Everybody freaked out. They thought it was going to go down. It didn't. But maybe after these rate hikes, it will. Let's take a look at the major indices, which, funnily enough, actually had a little uptick yesterday afternoon. There was some volatility when the rate hikes were announced, but then Papa Powell got on the mic. He was like, everything's going to be all right, guys. Well, that's not quite what he said, but he did say that they've seen signs of economic recovery already. So that's good news. There was a little uptick at the end of the day. And he said that they would probably do a 0.5 to 0.75% rate hike in July. He said that they'll be responding as inflation hopefully cools. So inflation has been taking quite the toll on crypto recently. I'm not sure if you've seen those headlines. Bitcoin is at its highest correlation with the SPX in 17 months, etc., etc. Everything's been going down to Goblin Town, as we can see here. But one crypto that people have been talking about quite a lot recently, especially this week, is Celsius and its native token. So Celsius is one of the largest crypto lending firms in the market at the moment. And as we can see, its native token has been having quite the bad year. This little dip over here is because it had some exposure to Terra. But what we're looking at is this dip from last week. So it went down over 40% last Friday, not ideal. The whole drama actually started elsewhere, when Lido's staked Ethereum depegged from Ethereum as people started to get worried about the upcoming merge. I'm sure you've heard about that. Ethereum is merging to proof of stake. So people started to get stressed, and the reason that Celsius was worried is because they actually have quite a lot of their customer funds stored in Lido's staked Ethereum. So they were worried people were going to see the depeg, freak out, run to try to get their money out, and they were going to be faced with a liquidity crisis. So they halted withdrawals, which is what this decline here is all about. People were like, we're going to pile in before the floor goes out from under them. That's what this nice little 145% gain was. But they have actually yet to start withdrawals again. Nobody's really sure what's going to happen then. But overall, what this is doing is, together with Terra from May, this is really shining a light on over-leveraged yield strategies. So please make sure you're doing your research out there. The crypto market is getting absolutely crazy. There's also a nice little nice little tweet thread here from Jack Newald, who will explain everything in just a little bit more detail if you're interested in that. But enough of crypto, let's touch on what's going on in the natural world. So we're going to be having a look at natural gas. What on earth happened here, natural gas? Check out that 16.5% drop on Tuesday. There's actually two things behind this drop. The first was that a company called Freeport LNG, which is one of the largest exporters of liquefied natural gas in the US, had a massive fire last week. And then this week on Tuesday, they said that they're not going to be opening that export terminal for at least another 3 months. Now, Freeport LNG is responsible for like 20% of US liquefied natural gas exports. So without that, the US market is now like super oversupplied, which is why US futures have gone down. However, on the other side of that, Europe is going to be really struggling because that's where all these exports were meant to be going. Europe also got handed a double whammy of bad news on Tuesday when Moscow said that it was going to be reducing the Nord Stream pipeline by 40%, which is a lot, because of the sanctions placed against it. So keep an eye out there because the commodities market is going to be getting crazier and crazier, especially with the European Central Bank looking at hiking rates. Well, that's enough of that. Please make sure that you are staying safe out there, guys. Obviously, that's not all we have to offer you. TradingView Snaps gives you a whole little rundown every single day of what's going on in the market. But until then, I'm going to go and cry over my portfolio, and I will see you later. Toodaloo.